Here's the key. Michigan's General Property Tax Act was a masterpiece of legal gymnastics. Here's how the scam worked. First, if you fell behind on property taxes, they'd mark your property delinquent in March. If you still hadn't paid by March of the next year, the property was forfeited to the county, though this didn't actually affect the title yet. Here's the key. The county could choose whether to foreclose. It was optional. They could sit on forfeited properties and cherry pick which ones to pursue based on their property value versus the debt owed. When they did decide to foreclose, they'd file a petition with the state circuit court by June 15th. If the owner didn't redeem the property by paying all the taxes, interest, penalties, and fees, the court would enter a foreclosure judgment, giving the county absolute title effective March 31st of the following year. Then comes the really creative part. The state got right of first refusal to buy the property for either the minimum bid, that's the tax debt, or the fair market value. But guess what? They always chose the minimum bid. The governmental body that ended up with the property was free to sell it at public auction for whatever they could get. But unlike literally every other foreclosure in American history, the former owner had no right to the surplus proceeds. It was a system designed from the ground up to circumvent constitutional protections by simply redefining property rights out of existence.